Good morning, everyone, and welcome to Morning Markets on Monday, the 30th of March. A couple of things from our morning meeting that I wanted to share with you today. The first of which we discussed the overnight equity market performance in Asia. What have we seen there? We've seen two markets perform strongly, South Korea and Australia. Both countries' governments have announced additional measures to support their economies in the face of the challenges posed by COVID-19. Across the rest of the region, we've seen markets generally weaker. Other things that we touched on this morning, and we've seen the first move in the recent number of months by the PBOC, that's the People's Bank of China, where they have reduced interest rates, and also where we have seen them provide additional liquidity into the market to the tune of $7 billion. The other thing that's interesting this morning that we've been discussing is the oil price. The oil price continues to weaken, hit by, I suppose, the two factors that we've previously discussed. One, the ongoing dispute between Saudi Arabia and Russia in terms of the battle for market share in the oil market. And secondly, the demand environment, which is evident to all of us as we continue with the lockdown phase in the UK and many other countries, that demand for oil and oil-related derivatives is significantly weaker, and that continues to pressure the price at a time when supply is very plentiful. So we've seen the oil price continue to weaken back to, I think, a 17-year low this morning. The other thing that we've discussed this morning is the Fitch rating downgrade of the UK from AA- to AA. I don't think this is really any news, to be honest. Everybody has known that the UK has moved very aggressively with fiscal stimulus. That does have implications for the size of the fiscal deficit. But I think actually at this point in time we prefer that the government take that aggressive action, and it's better to be more aggressive than less aggressive. This is just a function of how rating agencies work effectively. Other things just to think about, we'll get a lot of economic data in the coming days. Yes, I recognise most of that is backward looking, but we may start to get some data out from China and other Asian countries that will give us a sense of any recovery that they're seeing from COVID-19. And I think finally, just 2 days to the end of the quarter, likely to present some volatility as various market participants position themselves for quarter end. That's it for today. Please join me again tomorrow. Thank you very much.